A secret letter from the World Bank that was leaked shows that XRP, the digital asset created by Ripple, has been officially named as a Tier 1 global reserve asset. This is a huge step forward that will change the very foundations of global finance. This is a huge announcement that puts XRP in the same high level of importance as standard reserve assets like gold and sovereign debt. The effects of this are huge, not just for the cryptocurrency market, but for the whole world's banking system. As this memo says, the new Basel IV protocol says that all central banks around the world need to keep XRP as part of their reserve portfolios. This pretty much makes XRP official in a way that has never been seen before in the world of cryptocurrencies. As a crazy extra, it has an internal value benchmark set at $500,000 per coin. Before we can understand how important this event is, we need to know what a Tier 1 global reserve asset is. In the past, reserve assets were only real goods like gold or highly liquid sovereign bonds from countries that were stable. Global monetary stability depends on these assets. They give central banks the cash and safety they need to back their currencies and keep their economies stable. The fact that the World Bank put XRP in this special group shows that digital assets are no longer just speculation or weird technology. These institutions are now seen as important parts of the global banking system. Basel IV, the most recent set of global banking rules, makes capital adequacy and liquidity rules stricter. These are meant to protect the financial system from future disasters. One of the most important parts of it is that central banks have to diversify their funds by adding digital assets like XRP. Central banks can't ignore XRP anymore if they want to follow international rules because of this rule. In real life, this has led to a huge increase in institutional demand for XRP that is much higher than all the interest from investors and regular people put together. In real life, what does this mean? Imagine that all central banks, including the Federal Reserve in the US, the European Central Bank, the Bank of Japan, the People's Bank of China, and many more, were required by law to buy and keep XRP. This requires steady accumulation over time, which will put a lot of upward pressure on the prices of the limited number of XRP tokens available. There are only 100 billion XRP tokens available, and a lot of them are already locked up in lockup. This means that there aren't many tokens available on the market. As demand rises from such a large group of institutions, the price will always go up. The World Bank's estimate that one XRP is worth $500 million is not a guess. It's a minimum price that was calculated to represent the huge demand needed to meet Basel IV's needs while keeping the world's economy stable. One big reason XRP was picked for this important part in history is that it has some really cool tech features. Many cryptocurrencies use proof-of-work mining, which uses a lot of energy. XRP, on the other hand, uses a consensus algorithm that is much more efficient. This lets transfers happen quickly and cheaply while leaving little of an impact on the environment. This fits well with the increased focus on sustainability and money around the world. XRP's transaction speeds are measured in seconds, which makes it perfect for cross-border settlements. This is an important feature for reserve assets that need to stay liquid and flexible across multiple currency regions. Music XRP is also different from many other digital assets because of its governance and regulatory system. Ripple, the company that makes XRP, has aggressively worked with regulators around the world to promote openness and compliance, which builds trust among institutions. This regulatory clarity was definitely a big part of the World Bank's choice, since reserve assets need to be protected by clear laws to keep risk to a minimum. From a geopolitical point of view, this event could start a new age of monetary balance. As the world's main currency, the dollar has been a key part of the US economy's strength for many years. But it has also made things weaker and more tense, especially as countries look for ways to get around bans or expand their reserves. Adding XRP as a global reserve asset gives us a neutral, borderless option that can help make international banking more open to everyone. This change could lead to more stable and fair economic relationships between areas, including between emerging markets that have been left out of the dollar-centered system in the past. Music putting XRP into circulation will also have huge effects on the financial services business as a whole. Financial institutions like banks of payment processors, custodians, and fintech firms will have to build the systems and services needed to support storing and transacting XRP. This growth in the ecosystem will make XRP even more valuable and easy to use, which will draw even more institutional investors and start a positive cycle of adoption and integration. In the eyes of investors, this change is huge. The story about XRP shifts from being based on price speculation to being based on basic value and required demand. The price of $500,000 is no longer just a goal. It becomes a must because of real-world financial rules and the unchanging laws of supply and demand. This is a big change in how people value coins, not just based on how the market feels, but also on how they help keep the world's finances stable. But this change doesn't come without problems. To add XRP to the financial systems of central banks, technology will need to be improved, cybersecurity will need to be strengthened, and legal frameworks will need to be unified across all jurisdictions. The size of Basel IV's requirements means that these are important jobs that have to be done. The World Bank's support speeds up these changes by giving both a direction and a stamp of approval that will help get around political and practical problems. Music. We also need to think about what this means for society as a whole. Adding digital assets like XRP to the core of global finance will have an effect on everything, from monetary policy to how people use their banks every day. As XRP's role grows, foreign payments could be faster and cheaper, transaction costs could go down, and more people, especially in underserved areas, could have access to money. Because blockchain technology is open and efficient, it could help make the world's banking system more fair and easy to use. In the long run, this choice will have effects that go far beyond the financial markets. The official recognition of XRP by the World Bank marks the start of a new era in which technology and finance meet at the top levels of institutions. Basel IV's mission is likely to lead to more regulatory frameworks that allow for innovation while still keeping things stable.